Present market structure low. Yeah. And then from here, the rule is pretty simple. Whichever way price breaks is the way that it wants to go. So if price was to run up and break above market structure high and close above, then this would be a signal for higher prices. Um, Equally, if the market was to run down, break beneath market structure low and close beneath it, this will be a signal for lower prices. Now, when we're talking about when we're talking about signals for higher and lower prices, just because we get, like, let's just say price manages to run up and close above this market structure high here with a nice clean close, just because we close above um, the level and we've had a signal for higher prices doesn't necessarily mean we're going to go higher straight away. But you know what, let's take a look and see what price done in this example, and then we can explain further. So in this actual example, price has managed to run up towards market structure high and close above it. So we've got a nice run up and close above the high, which is what we refer to as a breaking structure. Yeah. So this breaking structure is going to be very important because this breaking structure lets us know, or it's kind of like the market's way or price's way of letting us know what's going to happen next. So because it's managed to break above this structure high, that means there's strength in the market, aka we're going to have higher prices soon. This is where it gets fairly important. Um, just because we've broken above market structure high doesn't mean that we're necessarily going to get higher prices straight away. It doesn't mean we're going to necessarily start flying up in a straight line. Obviously, as you know from what we looked at earlier on in the session, when price does like to move up or does like to move down, it likes to do it in the form of a trend. So that means we're going to get higher highs and higher lows, and we're going to get retracements as opposed to just a straight upward movement. So as soon as we break above a market structure high, the most thing that's usually most likely to happen next is price is actually going to roll over and um, come down back into the range to form a possible higher low, as opposed to just shoot up straight away. So what we need to do as smart traders, quote unquote, is we need to be looking downwards beneath the market for possible areas for a higher low to form. So for possible areas of support for a higher low to form, so that we can trade most likely the move that comes from that higher low, obviously because that move has been signaled. So this sort of movement here would be referred to as almost like a Q, because it lets us know that something is coming. Um, so like I said, price manages to run down before forming a higher low, and then completely gunning upwards, just to continue the nice simple uptrend that's happening here. So we have a high, higher low, high, high, and then the next thing that should form